Hello. Welcome to our next chapter, that is your IND AS 38, very easy IND AS, which is your intangible assets. So first let's understand what intangible assets are. So intangible assets, as you know, intangible assets can not be touched because it is intangible. So it is identifiable non-monetary asset without physical substance held for use. This is your definition of your intangible asset. So when will you recognize an asset as an intangible asset? So you will to identify identify as an intangible asset only and only you will be able, it can be identified as an intangible asset only and only if it is separable or arises out of legal obligation. Only if it is separable or arises out of legal obligation. You will recognize it as an intangible asset if it is within the control of entity, it provides future economic benefit whose cost can be reliably measured. So all three have to happen. Okay. So over here it is a or, but over here it is actually an and condition. Recognized as an intangible asset only and only if it is within the control of the entity, if it provides future economic benefits and whose cost can be reliably measured. Because if you cannot measure the cost reliably, at what amount will you value it? This is a important part, therefore I put it in a separate box. Customer list is an intangible asset. That means you can identify it as an intangible asset, but it cannot be recorded in books. It is also in the control of entity and it will also provide future economic benefits. But it cannot be recorded in the books since the cost is not ascertainable. You cannot ascertain the cost as to what is the cost of this customer list. Next, any internally generated goodwill cannot be recognized as an intangible asset. Only purchased goodwill can be recognized. Internally generated goodwill is not an intangible asset. Any non-compete fee that you pay, non-compete fee is an intangible asset as it satisfies all conditions. So therefore, non-compete fee is an intangible asset because cost can also be measured. It provides future economic benefits and it is in the control of entity. However, goodwill is not a intangible asset. Okay, coming to certain expenses, that is research and development expenses. Say for example, when you're making a software, when you're doing something, you're making a chemical formula, you'll have to do some research, you'll have to do some development. So basically research is the theoretical part and development is the practical part. So research, any expense that you put towards research, that will be sent straight to PNL. It will be expense to PNL. Okay, what about development? Development expenses can be capitalized. Capitalized to whom? Capitalized to my intangible asset. Development expenses will be capitalized to my intangible asset only and only till the asset is ready to use. The date it becomes ready to use, these expenses will be expense to PNL. Only till the date it is ready to use will it be capitalized. Okay, if development is capitalized only and only if it is legally possible, technically viable, cost is measurable and financially viable. So legally, technically, financially and cost, these are all conditions. All of these have to be satisfied. Only and only then will be allowed to capitalize. Otherwise we will be sending it to PNL. Pro, put it to PNL, put it as an expense. We will not allow you to capitalize it. We will allow you to capitalize only and only till till the intangible asset is ready to use. Till that point of time, till the asset is ready to use, and only when four conditions are satisfied, that is, it is legally possible, technically viable, cost is measurable, and it is financially viable. Next, any deferred revenue cost, say for example, your advertising cost, your preliminary expenses, staff training, initial operating loss, all of them needs to be written to P&L. Any deferred revenue cost, all of these will be written to P&L. If you are unable to differentiate that whether this is research or development, if you are unable to differentiate that this expense is research or development, whenever in doubt, transfer to P&L. When in doubt, transfer to P&L. We will not allow you to capitalize. If you are in doubt, put it in P&L and done. Next is what happens in case of revaluation gain and loss. When you are revaluing an intangible asset, how do you deal with it? So when you are revaluing it for the first time, when first time there is reval gain, that means there is reval gains, that means you are upward revalued. So if you remember, we did this in PP also. The first time upward revaluation will be sent to OCI. And if it is downward revaluation first time, then it will be sent to PNL. if there is any subsequent revaluation, if there is any subsequent revaluation and now we are revaluing even further, if there is a revaluation gain, and if previously there was also a gain, that means previously also we had sent to OCI, so now also we will be sending this to OCI. But if previously there was a loss, that means previously we had done this method, previously we sent it to PNL, and now we are upward revaluing. So what will you do? How much ever you had down, how much ever you had sent to PNL, first that will be put in PNL, then the balance will be put in OCI. Okay, so that means if your asset, say intangible asset was for 100, first you downward revalued it to 70 rupees. So this 30 rupees balance, where did you send it the first time? 30 rupees you must have sent to PNL. Now if this 70 rupees is revalued to, say for example 150, so now this 80 will be bifurcated into two, that is 30 and 50. 30 because earlier we had sent this 30 to PNL. So now this 30 we will be reversing from PNL, and this 50 we will be putting it into OCI. Okay. So this is basically your, yeah, this is the same comes to reval loss. Okay. This is the same. First you do from OCI, then balance to PNL. Okay, this is the same thing that I've explained over here. When an intangible asset is disposed or derecognized, full balance of the revaluation surplus should be transferred to retained earnings. Because if you sold the asset, now there is nothing with regards to revaluation. The asset does not exist anymore, so you will have to transfer it. You will have to transfer it to retained earnings the moment you sell or dispose of the intangible asset. Very similar to what we did in PP. Okay, so I put a small funda clear question so that it is clear. So say for example on 1st April 2011, you purchased a patent whose cost was rupees 3 lakh and uh, life was for 5 years. On 1st April 12, that means after 1 year, the written down value comes down to 1 lakh 50,000 and life is now only 2 years. Okay, so ideally life left was 4 years, but instead of 4 years, it is only 2 years. On 1st April 13, it is revalued to 3 lakh and life is still 2 years. In such a case, how do you calculate revaluation? So WDV as on 31st March 12, that means 1st April 11 was the starting, so 31st March 12 is the first year closing. That is 3 lakh into 4 by 5 by, because the life was 5 years and you used it for 1 year, so therefore depreciation will be 1/5. Basically your written down value will be 4/5. So therefore 4/5 of 3 lakh, which comes to 2 lakh 40,000. Okay. On 1/4/12, the written down value came to 1 lakh 50,000. That means from 2 lakh 40,000, you came to 1 lakh 50,000. So this is a difference of 90,000. So basically there is an impairment in this 36. There is an impairment of 90,000. Okay. Now what happens on 31st March 13? On 31st March 13, 1 lakh 50, your life is now only 2 years. So therefore depreciation will be 50% or half. So your WDV left will only be 75,000. On 1st April 13, your 1st April 13, it is back to 3 lakh. So from 75,000, the revaluation, the figure comes back to 3 lakh. Basically a difference of 2 lakh 25,000. There is a upward revaluation. So first we downward revaluation by 90,000, then we did upward revaluation by 2 lakh 25,000. This 90,000, where do you think we sent it? We sent it to PNL, correct? First time downward revaluation sent to PNL. So now this 2,25,000 is bifurcated into two. That is, first is 90,000 and second is your 1,35,000. 90,000, since we had originally debited PNL. So now we will be crediting PNL with 90,000. That means we will be reversing the effect. And the balance 1,35,000 will be credited to OCI. Therefore, 1,35,000 will be sent to OCI. And finally, on 31st March 14, since it will be 3 lakh into 3 by 4, this will be the WDV left, that is your 2 lakh 25,000. And with this, we are done with this chapter. We are done with this question, and I will see you in the next one.